Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 29th of September. I'm Daniel Lam, your host for the podcast. We upgraded gold to an overweight in our latest Global Market Outlook publication on Friday. We are optimistic on gold and expect prices to sustain a higher for longer path. Supporting factors include the resumption of the Fed rate cuts, seasonal jewelry demand from India and China, and a backdrop of US policies and geopolitical concerns. Now, out of the reasons aforementioned, macro factors seem to be the most dominating. For example, we have observed strengthening correlation between gold and real yields, as well as against the weakening US dollar. Rate cuts and the rising influence of the doubts in the Fed are positive for gold prices. There's also the ongoing demand for safe haven asset owing to heightened geopolitical risk, concerns around Fed independence, rising US debt, continued tariff uncertainties, and trade tensions. So this boils down to investors seeking a hard alternative asset to the US dollar. So on this front, it is worth noting China's announcement to develop custodian capabilities, which would develop and open its gold markets. Discussions and market commentary recently suggest family offices and retail investors remain underinvested in gold. And there is a theoretical analysis suggesting target gold allocation in portfolios at close to 10% versus current levels estimated at less than 2% in the US. Now, of course, we understand that short-term positioning is already somewhat stretched, but we do expect price pullbacks to be met with buy-on-dip demand, such as what we've been seeing in exchange-traded products, ETPs. Now, the volume there surged at its fastest pace in 3 months. So, for example, gold ETP holdings are up 91 tons so far in September. That's on track to mark the strongest month for inflows since April. Now, ultimately, we see gold prices surpassing $4,000 over the next 12 months. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.